Good afternoon, investors. You are now on KleverStock with me, Madhaveshwari, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates, Bursa Malaysia exhibited a subdued performance during early trade on Friday, with the benchmark index struggling for directions as the market prepares for a shortened trading week. The FBM KLCI edged up a marginal 0.01 of a point to 1750.86 by 9:15 am, recovering slightly from an opening dip of 2.96 points. Market observers noted that turnover remains thin, reflecting a cautious stance among investors ahead of the upcoming Chinese New Year festivities. Market sentiment on the broader exchange appeared lean toward a cautious side, with decliners significantly outnumbering gainers. Also, the market turnover was recorded at 169.47 million shares, valued at approximately 99.14 million ringgit. Analysts suggested that the recent burst of profit-taking were expected given the approaching long weekend, though the current consolidation phase might offer a strategic entry point for long-term investors. Rakuten Trades Sendirian Berhad, Vice President of Equity Research Thong Pak Leng, noted that while the index faced pressure on Thursday, any further decline could be viewed positively by those looking to accumulate stocks. He said that we reckon if the index dips further, it presents an excellent opportunity to bargain hunt. Thong also further highlighted that retail participation has remained relatively quiet so far this year, contributing to the low daily trading volumes observed across the board. Among the index's heavyweights, performance was largely mixed. Maybank and Tenaga Nasional saw light retreats while Public Bank remained unchanged and IHH Healthcare managed a small gain. In the active list, recent debutant Hawksoon and VS Industry faced selling pressure, while Nestle led the decliners list with a 50-cent drop. Looking ahead for the remainder of the session, analysts expect the benchmark index to maintain a narrow trading range between 1,745 and 1,755 points. Moving on now to our local currency and foreign exchange. The Malaysian economy concluded 2025 on a high note, with the official fourth quarter gross domestic product growth hitting 5.7%. The figure not only accelerated from the 5.2% recorded in the third quarter, but also exceeded initial market forecasts, marking the country's strongest economic performance since early 2024. The robust data has provided a solid foundation for the ringgit, which continues to trade at its strongest levels against the US dollar in nearly 8 years, even as the local stock exchange experiences tactical profit-taking. Driving this momentum is a resilient domestic market characterized by high consumer confidence and a tightening labor market, with unemployment remaining at low 2.9%. Professor Emeritus Dr. Barjoya Bardai of MUST noted that the composition of growth was policy-friendly, anchored by services, a rebound in manufacturing and sustained double-digit constructions growth. He highlighted that the expansion was broad-based, moving away from one-off factors towards sustainable private consumption and public investment. On the currency front, the ringgit surged to the 3.89 level against the greenback is being increasingly attributed to internal structural strengths rather than mere dollar weakness. Economists point to Malaysia's emerging role as a regional hub for data centers and the artificial intelligence supply chain as a magnet for the foreign direct investment. Dr. Muhammad Afzanizam Abdul Rashid of Bank Muamalat emphasized that the ringgit is establishing a new base amid encouraging domestic data, with technical indicators suggesting the currency could test the 3.87 support level in the near term. While the equity market saw the FBM KLCI dip slightly to 1,747.89 due to cautious sentiment in the global tech sector, analysts remain optimistic about the long-term trajectory. The stunning finish of 2025 is expected to carry over into 2026, supported by the Visit Malaysia Year initiatives and continued fiscal reforms. Many research houses have subsequently raised their growth projections for the coming year, suggesting that Malaysia is entering a sweet spot for the international investors. Now for some local economic news, Malaysia's economic performance has closed the 2025 financial year with a significant momentum as official data confirms a 5.7% expansion in the fourth quarter. This growth outpaced the 5.2% recorded in the third quarter and brought the full-year GDP growth to 4.9%, comfortably exceeding the government's original target range of 4.0% to 4.8%. The result was underpinned by a broad-based recovery across all major sectors, most notably a 6.0% surge in manufacturing and 8 consecutive quarter of double-digit growth for the construction industry at 11.9%. The robust GDP figures have provided a firm floor for the ringgit, which continues to trade near its strongest level since April 2018. Trading at approximately 3.89 against the US dollar, the local currency is benefiting from a combination of cooling US inflation and domestic stability premium. Chief Economist Dr. Muhammad Afzal Abdul Rashid also of Bank Muamalat highlighted that the ringgit is establishing a new base, supported by a healthy labour market where unemployment remains at a decade low of 2.9%. This resilience is expected to encourage Bank Negara Malaysia to maintain a steady interest rate policy throughout 2026. Complementing this macroeconomic strength is a thriving capital market, evidenced by the explosive debut of Key Ming Group Berhad on the ACE market. The stock more than doubled its IPO price on its first day, signaling intense investor appetite for companies tied to Malaysia's burgeoning status as a regional data center and renewable energy hub. This tech utility crossover is increasingly becoming a core driven of the FBMKL side, helping to cushion the impact of global tech volatility and shifting the trade policies abroad. On the trade front, Malaysia's proactive diplomacy is yielding record dividends, particularly through the recent Malaysia-UAE Comprehensive Economic Partnership Agreement. The nation's latest participation in the Gulf Food exhibition in Dubai generated 1.76 billion ringgit in export sales, surpassing all previous records. The Medtrade officials noted that the success of these early 2026 initiatives set a positive tone for the 52 upcoming trade promotions programs planned by the year, positions Malaysian exporters to capture larger shares of the Middle Eastern and North African markets. Looking ahead, analysts from the TA Research and HLIB Research suggest that while global trade barriers remain a risk, Malaysia's internal fundamental bolstered by festive spending, tourism recovery and AI-related investments provide a solid buffer. The consensus among economists is that 2026 will be a continuation of this sweet spot, with growth projected to settle around 4.6% to 5.0%. This sustained performance paired with fiscal reforms and high-valued foreign direct investment suggests that Malaysia is well positioned to navigate the complexities of the global economic landscape in the coming years. Continuing with more economic news updates, Malaysia's economic landscape is showing remarkable resilience as the 2026 begins, anchored by a series of high-performance milestones across trade, currency and capital markets. The Department of Statistics Malaysia recently confirmed that the economy grew by 5.7% in the final quarter of 2025, pushing the full-year growth to 4.9% and surpassing the government's official forecast. This momentum is being sustained by a record low unemployment rate of 2.9%, the lowest in over a decade, signaling a robust internal market capable of weathering global volatility. The ringgit has emerged as a primary beneficiary of this domestic strength, currently hovering at 8-year high against the US dollar. The local note's climb toward the 3.89 level is supported by a significant shift in trade dynamics, most notably through the Malaysia-UAE Comprehensive Economic Partnership Agreement. Matrade recently announced that Malaysia's participation in Gulffood 2026 generated a historic 1.76 billion ringgit in export sales, a 5.4% increase from the previous year. Matrade CEO Abu Bakar Yusof said the historic sales figure validates the impact of the CEPA on bilateral trade relations, even though the agreement is still at an early stage. In the equity markets, while the FBM KLCI has seen a minor profit taking ahead of the Chinese New Year break, investor enthusiasm is being redirected toward high-growth listings. The recent debut of gaming group Berhad on the ACE market stunned observers, with shares surging over 120% on their first day of the trading. This IPO fever is largely driven by the group's strategic focus on the data center and renewable energy sectors industry that are increasingly becoming the backbone of Malaysia's new economic framework. The government also remains optimistic that this sweet spot of low inflation and high growth will persist throughout 2026. Prime Minister Datuk Sri Anwar Ibrahim recently projected that the economy will expand between 4.5% and 5.0% this year, fueled by structural reforms and surge in high-value investments. As Malaysia prepares for its chairmanship of ASEAN, the current data suggests the nation is successfully transitioning from a period of recovery to one sustained broad-based expansion across all major industrial and service sectors. We'll now take a short break, but don't go away. We will return shortly with the corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate news updates. OJX Group Berhad is set to join the ACE market of Bursa Malaysia on March 12, 2026 with an initial public offering aimed at raising 52.5 million ringgit. The Shah Alam-based IT specialist will issue 150 million new shares at 35 cents each, bringing its total market capitalization on 263 million ringgit upon listing. The managing director, Tan Suan Leong, noted that the capital injection is critical for the company to keep pace with Malaysia's rapid digital transformation, focusing specifically on networking, cybersecurity, and enterprise data center solutions. The primary use of the proceeds involves a 30 million ringgit investment into a new corporate headquarters that will be served as a multifaceted hub for the company's operations. This facility is designed to house an IT infrastructure solutions experience center alongside expanded warehouse space, providing the physical capacity needed to handle large, more complex technical projects. By centralizing its technical demonstrations of inventory, OGX expects to improve its service delivery and better showcase its capabilities to potential corporate clients. Strategic growth beyond the Klang Valley is also a core component of the group's post-listing roadmap. OGX has earmarked 2 million ringgit specifically to enhance its market presence in Sabah and Sarawak, aiming to tap into the rising number of infrastructure and digitalization projects in the East Malaysia. Additionally, 2.5 million ringgit will be directed toward diversifying its brand and product portfolio, ensuring the group remains competitive by offering a wider array of cutting-edge solutions from its 18 global technology partners. The remaining 18 million ringgit will be utilized to optimize the company's financial position through the repayment of bank borrowings, as well as covering listing expenses and general working capital requirements. The IPO structure reserves 37.5 million shares for the Malaysian public, with the rest allocated to employees, directors, and the institutional investors. With a nearly 2-decade track record and diversified business model, OGX aims to leverage its new public status to strengthen its role as a key player in Malaysia's evolving technological landscape. Up next, we have some business updates. Hoksoon Capital Berhad experienced a cautious start during its maiden trading session on Bursa Malaysia's main market today, with its shares opening at 53 cents. This represented a 12% discount or a 7-cent drop from its initial public offering price of 60 cents. Despite the lower opening price, the poultry farming specialist immediately drew significant market attention, becoming the most actively traded counter on the exchange in early trade. By 9:26 a.m., the stock saw a slight recovery to 53.5 cents, though it remained 6.5 cents below its offer price. The high level of liquidity was evidenced by 35 million shares changing hands within the first half hour of trading. While the opening performance was softer than some anticipated, the high volume suggests a significant exchange of hands as the market seeks to find a stable price floor of the newcomer. The company successfully raised 60 million ringgit through its listing exercise, a capital injection dedicated entirely to its growth strategy within the agriculture sector. The vast majority of these proceeds, totaling 53.5 million ringgit or 89.1%, has been earmarked for the establishment of the new poultry farm in Teluk Intan, Perak. This expansion is expected to significantly bolster the group's production capacity and market reach in the coming years. The remaining 6.5 million ringgit of the IPO proceeds will be utilized to cover listing-related expenses. As the company transitions into the public sphere, management is focused to utilizing the newly acquired funds to solidify its operational footprint. while the debut price reflected broader market cautious ahead of the festive break. The firm's commitment to expanding its core assets in Perak remains the central pillar of its long-term value proposition. Finally, wrapping it up, we have major corporate developments and deals across Malaysia. Steel Hog Berhad landed a 3-year contract December 2025 to December 2028 to provide the landed 3 years the contract. Critical Holdings Berhad awarded 35 million ringgit project to build a clean room production floor in Penang, an American multinational corporation. As for the GDB Holdings Berhad successfully obtained a High Court judgment to recover 102.1 million from KSK Land regarding the 8 Conley development. Moving on with the Hexter Industries Berhad, moving into the F&B space by purchasing a 51% stake in the Malaysia Yo-Yo franchise for 177.5 million ringgit, inclusive of a 3-year profit guarantee. Maxis Berhad reported an 18% year-on-year jump in fourth quarter financial year 2025 net profit to 380 million ringgit, fueled by strong service revenue and efficient cost management. Infraharta Holdings Berhad secured an 11.4 million ringgit subcontract for the construction of a health clinic and dental center in Putrajaya. The Malayan Flour Mills Berhad challenging a 70 million ringgit competition fine through a High Court judicial review after an initial appeal was rejected. SKP Resources Berhad experienced a 37% decline in the third financial year 2026 net profit to 16.1 million ringgit due to a dip in sales volume and revenue. The Oriental Kopi Holdings Berhad acquiring its own leased land and warehouse facility in Puchong for 23 million ringgit to consolidate operations. UEM Sunrise Berhad bolstered its capital by completing a 500 million ringgit issuance of Islamic medium-term notes. MGB Berhad reached the topping out phase for its Idaman Perdana project, signaling the completion of the main building structure. Well, that's all for the midday today. That's a wrap. And with me, Madhveshwari on KleverStock, thank you for choosing us investors. Stay tuned for our upcoming live streams.